Well, I want to say hello to everybody. I hope you're doing great today. My name is Jeff Gibby. I just kind of sit here and I introduce the great guests that we have. Today we have Oscar Carboni. Oscar has been using Metastock since, I want to say, the 80s, but I believe that's accurate. He runs a little bit of you can find Oscar at livewithoscar.com. He's been a big supporter and advocate of Metastock, and he runs a really good live in-person boot camp down in Vegas several times a year. And so livewithoscar.com, we'll talk a little bit about that, but you should look him up. He's a great guy. He's a good analyst, and he does a very, very good job. Thank you, Oscar, for everything that you've done. Before I get too ahead of myself, though, I should probably read this legal disclaimer. So let me go ahead and share that real quick. And to do that, I need to make myself the presenter. I need to show my screen. And
the broadcast is now starting. All attendees are in listen-only mode.
Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So welcome, Oscar. I'm going to go, I assume we're going to be using your Metastock today.
Yes, we will.
Okay. I'm going to go ahead and get that over here. And I want to, while we're kind of getting that situated, and I just made you the presenter so you can share your screen, I'm going to just kind of say hello to a few people that are talking in YouTube and just say welcome. So welcome, Vincenzo. It's good to see you. Gary says, you're the best, Oscar. MKKM says, the power of Omni. Paul says, hello. Good evening, Vincenzo. Hello, Slick Pete. DPP6 talks about your big dog. Slick Pete says, Oscar is legendary, the best track record ever. So, and I think that catches us up. Hello, Dan Tipton. If you're here, if you have symbols you want to talk about, any of that kind of stuff, just type them in the comments below. So with that being said, let me go back into my GoToWebinar so I can see. We do see your charts, and it looks like we're going to start with a ES. So
yes, we are.
I am very, very curious. You know, obviously we've had a bit of a tumultuous week. We've set a new high. We had a little bit of a sell-off yesterday. I'm really interested to see what you have to say. So let's go ahead and talk about it.
Well, Jeff, thank you so much. Metastock, as always, thank you for having me. What a great software program. And traders, thank you for tuning in. I know Jeff mentioned some risk to you, but please know how risky this game is. You can lose way more than you've got in your trading account if you do something crazy like short sell options, get into a futures position without a stop. There's huge inherent risk in this game. At the same time, lots of money can also be made, but always worry about your risk first. Always know where you're going to get out of the trade before you get in. And I'd like to make sure that I mention to you to put your stops in before you begin to trade. In this way, no matter what happens, you're knocked out of that trade when something goes wrong without you making a crazy decision to cancel your stop or not get out of the trade. So put those stops in and make sure that these crazy volatile markets do not take you out. Thank you for tuning in. We've, as Jeff said, tumultuous week, crazy movement, some unexpected movement, but when you use a chart, you can almost keep the market in check and know what should come next and then how to behave when that takes place. So we're looking at the E-mini S&P. It's a daily bar chart. It's been in this green channel for quite some time. If you get to the bottom of the channel, as you might note, it bounces right off and moves higher. You get near the bottom of the channel, it just takes off. We hit the bottom of the channel, it takes off to the top of the channel. So the channel is valid. It's been working for quite some time. As of the close Thursday afternoon, this does not show Friday's bar yet. It's not populated. As of the close Thursday afternoon, I basically said this is a do or die situation. If the market opens and breaks through these trend lines right here, and let me move the circle and show you why. If the market opens, breaks through these trend lines and closes down here on Friday afternoon, I think the market will set back even further next week. Now, at 5 p.m. in 24 minutes, we'll get to update this chart and see what today's bar has in store for us. So this is the analysis for last night into Friday morning. You might also note that riding along the bottom of this channel, very valid channel, is the 50 bar moving average. And once again, Wall Street uses that 50 bar moving average more than you might imagine. And it's running along the bottom of the channel, and it's right here below the lows of settlement on Thursday afternoon. So if the market, again, we'll find out in a little while, on Friday it opened and it did dump. That's okay. As long as it settles back into this channel, maybe, just maybe, we get saved. So there's a larger trend line here, and we're just looking at trend line, simple trend line analysis. And what most people don't recognize is you hear so much about algorithms out there, and algorithms are scary, so to speak. We're not certain what they are. It's more Wall Street jargon to scare you. But those algorithms are simply calculating where the market has gotten down to and how far up it's gone, and it calculates exactly what we're looking at. So the algorithms see the tabular history. Down here, the price comes in at exactly, and you can see the price. They write that price down. Up here, the algorithms are recording the prices. So it recognizes the algebra in the markets, and that's what this is about. And there's a fantastic algebraic line right here off these lows, the low you can fit on the screen, to the latest low. We extend out, and once again, that fits right where all the traffic is taking place. Very important that the market settles above the blue line this afternoon. So market closes at 5 p.m. We'll find that out. Overall, though, even though the market's been coming down, you must realize it's in really good shape for now. We do have an issue with the Fed printing too many dollars, which at some point will be extremely detrimental if they do not clean that up a little bit. I don't think we're there yet, but we're at a point where dollar printing is literally starting to shake the markets, which means we've reached the point of equilibrium and printed enough dollars since 2009. And I think we'll see that in some of the charts that we're going to look at this afternoon. So as far as S&P is concerned, we'll actually have a better handle on it before the end of this webinar when we update this chart and see where the settlement came in. Let's go look at the Nasdaq. Now, the Nasdaq, slightly scarier, if you ask me. In fact, I did a video last night, one chart in that video. This was the chart, and I said, uh-oh, that's not good looking at all. And as you can see on this chart, using simple trend line analysis, you've got this wonderful blue channel, which has worked really well. And then you've got this red channel. You have broken both of those channels. You are creating the look of a bear flag right here. This could be considered a flag pole. And if we darken that in, you'll see what I'm getting at in just a moment. This could easily be a flag building here. And what's starting to happen if this is a flag is it's building right below. Now let's just ask for a parallel of that, drop it down here. It's happening below the channels. So you really do not want to see a flag start to build here. But we'll put it in because that's what it looks like is happening to me. And of course, today's bar will give us a lot more data to go off of over this weekend for next week. But this could easily be a flag building, a bear flag. It's little, but sometimes bear flags, because of the nature of markets and market gravity, do not need more than a few days before they break. So this could be a bear flag building. We're certainly below the blue channel. We are below the red channel. And we've got a bar in Nasdaq today that probably dropped down even further and looks more like this. We will update this bar shortly, but I think this is what our bar probably looks like. If that's the case, then that is a flag. It is working, and downward pressure will come on the market. So these are the simpler techniques I've been looking at to see where the market's going to stay or move. Will it stay in check? Will we start to break down? But the Nasdaq does not look nearly as good as the S&P did for this reason. The S&P was still above, and you could give it credit. This is a bull market. It's not a bear market. So the S&P being above all of this action I'm showing you right here was healthier looking. The Nasdaq being below, not good at all. I do not like that look. I think this could be our fate, and then the next bar will be even further down. But again, we did not put in Friday's bar yet. If in fact Friday's bar, once we put it in, looked like this, well, then we'd be saved, right? We would think it held. We're back in the channel, and you can buy it again. So a lot rides upon what that bar will look like on settlement this afternoon in another 20 minutes. Nasdaq itself, though, if you look at the entire chart, is not in bad shape, right? I mean, it's up really high. It doesn't look like it's falling apart quickly. So overall, especially if we stepped out to the weekly charts, we're not in terrible shape right now. We are getting an adjustment or a readjustment for interest rate movement, and I think that's what we're seeing here. So Nasdaq and S&P for the week were volatility, yes. S&P seems to have held inside of its channels, but Nasdaq, which does more leading than S&P does, seems to be much worse looking. Let's go look at other indices. Russell 2000. Once again, Friday's bar is not included. This is analysis up until the close on Thursday afternoon. Support channels should be tested today, Friday, and I'm sure they already have been. And we're going to see what this bar looks like. And once again, just as I showed you in the Nasdaq, if this bar, when this bar populates, if it looks like this, does not bode well for Monday's session, because that would mean we are below the channel. There is a red support line here, a strong support line. Look at this. That is a very solid support line. And you've got the green bottom of the channel. So this bar doesn't exist yet. If this is what Friday's bar looks like, that bodes for lower markets on Monday, Sunday night through Monday. Once again, I promise to re-go through these charts right at the end of the day, and we'll populate the bar and see what they look like. Another interesting chart is your Dow Jones Transportation Average, because of all the charts, this one looks the best. This one looks like it's got zero problem with it at all. Look at the structure. It's well above the two channels that I was pointing out that the other markets, the other indices are on top of or beneath. The 50-bar moving average is low. The street's not worried about that. So the transportation average actually looks great compared to the other indices that I follow. Nasdaq, Nasdaq, Russell, Dow, transportation, and ES. This looks the best out of those five right now. We'll see where that's going to go, but for now, if this was the only chart to look at, I would tell you certainly buy the dips when they come. And if you are someone who knows how to use channels, there is a natural channel building. I can see it with my eyes right along here. And it probably is two types of channels. Let me show you two channels I see building right here. So let's put that in. We'll make it blue. And if we snap a parallel so that we have an exact channel, we'll see what this looks like. So we've got something like this brewing. But bigger than that, I think, is this channel. Right from the low, the first up bar to the low here. I think if you extend that, that's the channel to be watching. So let me show you how this looks. And I didn't even put this on the chart until now, but I can see these things. As soon as I pull up a chart, the things jump out at me, this being one. Let's make it red. So now we will ask for a parallel of that, and boom, that sits right along every high. That is a very nice channel.
Quick question for you, Oscar.
Yes. What you got, buddy?
You had kind of talked a little bit about kind of the Fed and printing money. And what do you think the impacts of the market to a careless Fed printing policy is?
Oh, we're going on Saturday, we're going to go over a lot of charts that will actually show you that the Fed printing money is absolutely affecting the markets, and creating inflation. So I've got that planned for tomorrow's webinar. So tonight we'll go over what happened during the week. If you join me tomorrow, my session is at 4 p.m. I will go over a vast amount of charts that I see calling for inflation, making it look like rates will go higher, and possibly maybe make the real estate market stutter just a little bit as well. So I've got that planned for tomorrow's webinar if you want to join me for that.
Are we doing something tomorrow too?
Don't we have something planned for tomorrow? Big event?
You can join us tomorrow. We're going to do an 8-hour session that starts at 8 a.m. or 10 a.m. Eastern, and that is join us at metastock.com/traders summit. And I'm sure Greg is already putting that in the comments for us. So thanks for the plug for the Traders Summit, Oscar.
Oh, no doubt. That happens tomorrow, and I love doing those. We will certainly go over interest rates, the market, what it means, and what it could mean for the future in tomorrow's webinar. What we're looking at here is that's a much prettier channel than anything else I've shown you in the indices in the last 4 charts, right? So what we call, on many occasions, the leader of U.S. indices is certainly not showing us that the top is in yet. Looking at this top day as of Thursday afternoon, Friday's bar's not in there. So again, looking at this, it doesn't scare me even slightly if the markets have a bit of a pullback. Looking at something like the Nasdaq, that's a little more scary, but it's also much of a more volatile indice. It moves quicker, larger ranges. I think more people jump in and out of it a lot faster, which is why it's not as good of an indicator as something solid and slow, like the transportation average. Let's see what else we have. There should be at least another chart or two I want to throw into tonight's before we open it up to suggestions.
Okay.
Yeah, it's starting to head towards what you were just mentioning. This is one of the reasons, Jeff. This bond market has been going down for over a year. When bonds go down, interest rates go up automatically, whether the Fed wants them to go up or not. If bonds go down, interest rates automatically move higher. Interest rates, whether we have been paying attention or not, have been moving higher for a year. Now it's starting to accelerate. Look at the blue channel. Used to be the red channel. Then this channel started to develop a little bit. I'll darken that in so you can see what I'm getting at. And then this was, still on the way down, but not as steep. Well, look at what's starting to happen now. Look at the steepness of the move that's starting to now ensue compared to what we had over the last year, which sort of makes me think that we've got a little bit of a problem coming in the bond market. If this continues, rates will certainly move higher. So, and of course, we'll talk more about this subject tomorrow during our webinar. But as the bond market moves lower, interest rates move higher. Does not matter what the Fed says. If banks and traders wanted to get together right now and sell bonds till the cows came home, rates would go higher whether the Fed says something or not. And then what else happened this week? So this all week long, except for, what's this, Thursday or Friday? Let's see what day this is. This is 26th. That's today. It's already in. With the exception of one day, we have done nothing but drop this entire week, including some days of last week. So bonds here, their rates aren't all that expensive now at 2.5%, 3%. They hit 5%. You'll hear, you will be hearing from the blockheads in the street, I promise you. And then one of the main reasons why all of this is happening is the dollar. Let me see if I have that in my little file. I'm sure we have a dollar somewhere. Oh, wrong webinar. That was an old webinar. Dollar. Yes, we do. Most of what we're seeing, the stock market in general, having that major rally it's had for so long, and the bonds as well were rallying for quite some time. Dollar was coming off, but the dollar was coming off at levels 98, 95, 97. It stayed above the 90s. Right here, we're still at 96.5, where my cursor is. No problem with the dollar then. Well, now we're talking about dollars breaking the 89 level. Now it's starting to catch a little more attention. We keep printing the dollars. Inflationary markets are moving higher rapidly. I think we have reached our point of equilibrium in printing dollars. Easy to see. Now, every time the dollar moves, all the other markets are starting to do this, which never happened in the last 5 years. Too many dollars have now been printed. And this is all of this has been taking place for weeks and weeks, but we're looking at what happened just this last week. And dollars spent basically the whole week, with the exception of trying to go up twice, down over the last 6 days, moving mostly down. The formation itself is lower. The entire chart is lower. So, you know, we've got a little bit of a problem with these dollars being printed. I think we're at our spot where we should stop printing those dollars. Now, while they print dollars, it does make the stock market go higher. But that comes to an end when interest rates get high enough where if you've got enough money where you've already made billions of dollars in your company or family, you pull it out of everything else and you put it in bonds because it's a guaranteed 5% return. No worry about risk anymore. We've already made billions. Why should we turn billions to millions when we can keep them as billions? And that's why the stock market comes down when bonds start to go up. It's a much smarter bet to pull your money out of a risk asset like stocks or anything else and drop it in government guaranteed return bonds. So as interest rates go higher, real estate feels it, the stock market feels it, and all the commodities go berserk to the upside, which creates more inflation. We're starting to head into that cycle now, and we'll certainly learn more about this at tomorrow's webinar.
Okay.
So, do we have questions for what we've seen for this week so far?
Dan wants to know if you would like a day off.
You know, we'll rest in a couple of months. Not yet.
We do have some questions or we do have some symbol requests if you're ready to take a few.
Absolutely.
Let's take a look at Netflix, NFLX.O, if I remember right.
Go pull up anything that doesn't matter to me. Good. So, NFLX.O, and it's the number. It's the letter 0, correct? The letter O, not the number 0.
The letter O, correct.
Got it. All right, so let's do this. Apply template, the webinar template. It gives us a lot more bars. And we are now looking at Mr. Netflix. Let's label it. And that's a daily, I'm assuming. Yes, it is. Mm-hmm. So Netflix daily bar. Let's get more bars in here. So when you look at a chart like this, I mean, why I leave this average there is because I kid you not, it seems so simple, but the 50-bar moving average and algorithms love one another. So you might note that when you get near the 50, unless it's going to be volatile action, you will hold. Right? Almost always, you will hold, especially the major stocks, when you see a 50-bar moving average. Algorithms know. Sorry about that. Algorithms know because they're calculating the exact same things we're looking at. So with the exception of when it gets volatile, generally you can expect the 50 to be held. So we've had lots of volatility in the last few months, especially due to Corona. So you can see it's broken through sometimes. What I like is that it held right there. One bar went through only and immediately started to gain its legs again. So if I had to analyze this chart without knowing anything about it, what I would say is if you just do something simple like this, anybody that really doesn't know how to gauge a chart, right off the bat, just do something simple like this. Is that line going up or down? If the line's going up, you know that you've got a market that's moving higher. So right off the bat, you would call it a bull market, and then you can start approaching your analysis from a bull market standpoint. Right, so I look at that and go, okay, that's definitely going up, not down. I wouldn't call that a bear channel. I'd call that some kind of a bullish sort of channel. So from there, I would look at this and say, well, then maybe we're looking at holding the 50 because the last time we went and tested it, we tested it right here, hit the trend line, rallied out, tried to test it again, rallied out, tested it, got above it. So I would say literally this is what you want to wait for on Monday. Can you hold above this? If you hold above that, buyers will come in because the street sort of works in unison. This is a stock that would be in funds. It's Netflix. So I would think the funds would come in and buy that if it held. And at the same time, you might see the same sort of action, because you might notice, let's go back a little, when it does break, the funds come in and start hammering it to see if it's going to continue, like right here. When it does break the 50, they do come in and play. They'll come in and push, but it's got to break the 50 and stay for a few days before the funds come in and start hammering it. This did not last for more than 1 day. This didn't last for more than 1 day. It settled right back above. Same here, same here, same here. But here it lasted 3 days. They came in and hit it. Now look at this. Same thing here. It didn't hold for a day. They came in and hit it for a while. Here you only had 1 day underneath, went back up. 1 day underneath, went back up. Here it didn't go through. They didn't hit it. Here it only went through for a day. They didn't hit it. You can almost read how the street uses that average if you understand the mentality. So I would say that you're basically looking at this. This is your trigger for Monday or even Tuesday. It just depends on when they mess with it. You stay above that, you're in good shape. You get below that, expect to come at least down to this line, if not further. Next thing that would come into play, of course, is do they want to bounce it off the 200 bar moving average? Gives you some playroom, though, considering that it closed at 546, and that brings you all the way down to where are we at? 498. So, $50 in play there. So that's the way I view that without running what I call my Omni, which would tell me exactly what arrow I have, but without putting my Omni analysis on the chart. Abstract analysis in Netflix, I would say if you hold that 50, I think you'd be able to buy this.
Okay, looks good. Peter wants to know, is ARK sinking, ARK?
ARK. And that's another .o?
I'm not sure. I don't think it's actually a .o. What where it says name or symbol, click on symbol, and we'll be able to find out a lot easier.
Let's do the .o. No, it's .o.
Nope, it doesn't look like. I think it's just ARK.
Power console always finds it. Let's see if the .o comes out. Let's try it without the .o. No. Okay. Now I need ideas.
Let's see. I'm looking. I actually am not finding that symbol either. Not
stock? If it's a penny stock, there's no sense of pulling it up anyway. I won't even analyze it.
There's an ARK. Okay, I think we move on. We need a symbol for that. I don't think that is a proper symbol. He might have actually been referring to maybe the ship is sinking. Let's go ahead and look at Wynn.
Oh, no. I have a partner on the phone. Oh, no. Let me just have him call someone else. Hey, would you do me a favor and just call the building? Someone will help you out. I'm running a seminar. Just call the other. Just call the house number.
Okay.
Okay, thank you. Appreciate it. All right, bye. Sorry about that. Last time we did one of these, the gardener showed up right in the middle of it. All right.
Well, that's okay.
You know the symbol. I'm getting bored here, kids.
ARKK.K.
.K?
Mm-hmm.
ARKK.K. Ooh,
There you go.
crazy. I don't know this stock. I don't recognize this chart. All right, let's go like this. All right, let's eyeball this for a moment. Well, it's a pretty nice looking chart with the exception of us breaking this major trend line right now. So it's becoming a theme. It almost appears no matter what chart we look at, they're all at a spot where it's almost do or die, like I showed you in the first chart. Because what I'm seeing here is the same thing. You come down and break that, you got a big problem. And this is a stock, not an indice. All the indices are there right now. If all the stocks start getting to that spot, maybe there's more to this than we think, kids. So analyzing this, I think this looks great all the way up until you got under the 50. What a stock. I mean, wow. Don't know what it is. Seems to be moving really well. I dislike the gap, the break under the 50 and what's happening right here. So I guess simplest analysis is Wait for down here, and if it holds, you've got your buy spot.
All right.
Because it doesn't look like it. I mean, I couldn't give you a buy in this right here, right? Nobody would glance at that and call it a buy. So, and it is creating some sort of a downward channel here. Nothing tight, but some sort of a downward channel. We'll just throw a parallel on there. So you do have a channel. I mean, right now, this would be your targeted area, somewhere around the 120 spot, 121. And then if it holds there, well, maybe it's gained its legs, which, if you ask me, a good analyst would have buy orders waiting down here. Just look at that solid trend line. And in fact, it probably hits a lot of tops too. Let's just see what it does up here. Right, so it hits a lot of these tops, and then it broke above that, right? Let's say this was your original channel. It broke above that, but now we're back inside of that channel. So why not think you come to the bottom of the channel and then maybe it finds its legs. One day at a time, of course, but that's what I'd be looking for. This was ARK, huh?
All right. Dan would like to look at WYNN.
NN, Wynn.
Wynn. I think that's a .o too, but
yeah, the owner of Wynn
it is
too, but he can't. Oh, what's up with that?
That's not the right one. .o.
All right.
Perfect.
Huh. Well, let's go see what's happening back there, because let's get this out of our way. What's going on back there? Ooh. Were you looking at that, Dano? Look what's going to happen eventually, not too far from here either. What do you got? $30, 20, we're at 30, 20 bucks. Look at this. So that, is certainly going to create a wrinkle when you get there, if you get there. Now let's look at a little more short term. What's happening here? We've got a gap. We're above the 200. I think that's got a nice structure there, no? It doesn't scare me at all. It's got a couple of down days. I like the structure of this chart.
I've noticed a lot of
what's that?
I've noticed a lot of stocks that were beat up due to Corona have this kind of a structure that we're looking at, where they've kind of really, like Car.o is a good example, or Play, or RCL. They've just been kind of going up very quickly, and then they've sold off for a couple of days. This looks like a lot of the charts I've been looking at right now.
It makes perfect sense, because look, it hits the top of a channel line. Now it's going to the bottom of a channel line. I wouldn't categorize this as one that will fall with the rest of the market. Even if it does, it looks good to me. I'd buy dips. You have a whole plateau right here as well. If you're looking at it, you got this whole plateau to sit above. So buying dips, as long as you don't get under this plateau, it looks fine to me. And then, of course, throw a fundamental at it. Wynn is a casino here in Vegas and Macau, of course. And it's starting to get busier here. It's starting to get busier everywhere. So you'd have to think that the casino will do better as COVID starts to go away. So I think that this is definitely a buy of dips unless something major changes.
All right. Let's take a look at FB, Facebook.
Mr. Facebook.
We have a few people interested. Mark wanted to look at Facebook.
Is that a .o as well? Because Facebook never comes up for me ever. I always have to find it somehow.
I believe it's FB.o, yes. Yep. 100%.
Still didn't come up. Oh, there it is. Beautiful. All right. Ew, yuck. You see what's happening there, right? All right.
Yeah.
So let's just throw a few lines on here so that we can see. So taking the lowest low I can fit on my chart to the next low it will connect to. Once again, another stock that's at that do or die spot. It's got to mean something, being that so many stocks are at these support levels. So you see that came right in. So that's slightly longer term. We're below that. And if I try to convert this into another, oh, okay, so you also have this going on. Check this out. You've got that, which kind of guess works with this. Yeah, I guess it's almost a channel. So it's starting to slowly. You see, if you can see what my hands are doing, it's slowly starting to do this. You know what I'm saying? I'd much prefer a better arc on this. So you are below the 50 bar moving average. You are also below the 200 bar moving average. That's this one. And if you think the 50 is important to Wall Street, for some reason, they think the 200 bar moving average is the end all be all to trading. If you get under it, they pound it. If you get above it, they buy it. And it's proof anytime you look at it. Look right here. You get below it, pound it. You get above it, they love it. And it's been that way for years. The 200 is a very easy average to use. You are below it right now and below the trend line. Let's blow that up so you can see it. See that, right? So I'm not very happy with the look of Facebook. I have to tell you, it looks like a stock that's going to get hit. It's funny because I looked at this the other day in my video. I think I put it in my video the other day for the same reason, but it was turning bullish for a day. I put it in my video on this day. Maybe you'll understand why, being that you're starting to understand the type of analysis I do. We held right here, and I said, okay, why not buy that? Where we held the 200, we held the big trend line, but then the next day it tested and then it broke. So you see where it was supposed to hold here like it did here and go, it did not. It held here and failed at the 50 bar moving average. That does not look good to me, kids. That's an ugly look right there.
All right. Saffron would like you to look at TLSA, not TSLA, TLSA.
TLSA. Huh? Somebody definitely wants people to buy the stock thinking they're buying Tesla.
Yeah. I got
to give the guy. I got to give that company credit. That's brilliant. This couldn't be it, could it?
Let's try it again. TLSA.O. Yeah, there you go. That looks a little bit more like it.
Well, this is a stock I wouldn't ever trade. I wouldn't go near it. I wouldn't trade it with my enemy's money. I just don't like it at all. Let's flip a template on it, but I don't like it. Yuck. You're not buying this, are you? Whoever wanted to know about it? Here's my advice. Let it go to 0 because it's at 2.5 now. It's ugly looking. I think it'll be down here in a flash. Now, that doesn't seem like anything, but when it's 298 and maybe it drops to 2, it's a lot of movement. A lot of movement in the stock. I don't like that stock at all. And, you know, there is a thing. I don't know if I pointed it out. Let's see. Where is it at? You know what? Let me point it out to you. One of the things that's starting to happen now on several markets is we're starting to get these death crosses. And let me show you. I know I have one because I was looking at it earlier this afternoon. Death cross. We've been seeing a lot of them lately. We haven't seen them for years, I have to be honest with you. The 50 and the 200 have not come together for years. Look at this death cross on gold and how well it's worked since. So we're starting to see that now. Facebook is kind of getting into that action a little bit itself, as we just seen. So, you know, everything has to be kept in mind. Analysis isn't about one chart. It's about all the markets and how they are interacting with one another. And if you pull up charts and 52 charts are at the 200 bar moving average, it's trying to tell you something. What we're seeing now is a lot of charts are at a do or die point. That's starting to talk to us a little bit. And then, of course, with these death crosses, we've seen the other side of them. We didn't see a death cross for years. We're seeing the opposite side, the golden cross. They cross, they stay that way for years, but now look, death cross, big difference. So we're starting to see that in many markets, actually, or they're getting closer to crossing. And algorithm put that in their analysis as well, I assure you. But I did want to go back and take a look at the S&P. Remember, we didn't have updated charts?
Let's take a look at
these charts for today and see what happened.
Well, you're jumping
All right, so
to
look, we stayed in so far. S&P did not fall below both channels. You see that? It held. This is Friday now. Today's bar has populated. So we tested the 50. We tested the channel. We didn't break through equal. Guess we have more testing to do on Sunday through Monday. I'm assuming you're selling the rallies for now until something changes, but we're getting closer to the bottom of a channel. If we cannot take the channel out, you stop and bounce back up. But let's update the other indices as well. This is the one I was mostly worried about. And we are below, we're below a line I didn't even bother to show you guys, but let's put that in too. We're below this trend line now as well. That goes all the way back. Look at this one. Goes all the way back. So hits that low, hits this low, cuts through there. We are now below that. We are below the red line. Let me make that a little darker for you. We're below that red line. We're below the blue line. We're below the 50 ball moving average. Nasdaq doesn't look nearly as helpful to the bull picture as that settlement in S&P did. And we have to update the Russell too. And Russell held what I was hoping for, to be honest. Russell held so far. It's above the trend line, both the green and the red. And it did not break down to the 50 ball moving average, which is the black line here. Sorry about the noise outside, kids. Can't help it. So now that we've seen the updates, at least we're not in a spot that says, oh no, the sky's going to fall. We're in a spot that says, you know what? Maybe we sit back Sunday, Monday, and let this tell us what to do next. I'm actually glad to see that. I was hoping that's what I would see and not all three indices below their channels. So, hey, maybe we get saved. This is a bull market. They love to come in and buy it. Is there something else we can look at?
XLF.
XLF.
By
all right.
004, and then a bunch of other stuff on its username.
And that's going to be another dot. Oh, I got to assume on that. Nope. XLF.
Okay.
What?
Let me find it real quick. XLF. Just XLF. It's an ETF. So
I know it well, actually. Boom.
Okay.
Once again, you can see the channel with your own eyes. Do I even have to draw it? You go from here to here. It'll go right to the bottom of here. You're at another do or die spot at the 50 ball moving average. Street's going to see that for sure. Chart structure itself, I think, looks great, except for, of course, we're in the middle of a pullback. You did get above the double high, so that's all out of the way. We don't have to worry about that anymore. I don't dislike this. I think you can buy this on pullbacks. Again, I don't know if I can reiterate this enough times to you that 50 ball moving average and Wall Street seem to be married to one another. And that's right where you're at right now. Now, we're certainly coming down in a channel form, in a channel type form. Right? Looks to me like we've got a channel. I'll just drop it out here just for the illustration. So we're in a downward channel, challenging the 50 ball moving average. You've already shown that it's having trouble because this thing was taken out. Well, at least it should be. Well, let me draw two of them. Two channels here. This one or two spot lines. You're going to get this one, which should be tested Monday. And I hope it holds. And then don't forget, you've got this one, which it's already plowed its way through. It's already through that one. Now we'll find out if it's going to hold the 50 or if we're going to continue down in this channel.
Now the blue line, I think the cyan line is a 200 moving average.
Moving average, correct.
Okay. Ekdeman was asking.
That's the 200. Because I grew up on Wall Street, and I've heard so many times traders sitting there discussing their trends and their charts, and I always hear the 50 and the 200 as if it's magical. Okay, if the street uses it, so does Oscar. You know what I mean? I'm certainly not going to turn away from it. You guys think it's magical? I'll figure out how to use it. But it can be, because look at how many times they sold it when it got there, right? And you can see they tried buying it when it got above. It didn't work. Once it got above here and it did work, they went crazy on it. So it's a magnet, and they will key off of the 200. 50 is there more often than the 200, so they get to play that more often. But when you get to the 200, you know something's going to happen almost always.
Dano wants to look at TWLO.K.
TWLO, I know it. .K, he knows the symbols. Tulo is a friend of mine, knows the owner of this company really well. Ooh. What is every stock in the world at the 50-ball moving average? This is getting boring. What should I tell you the same thing I told you in the last one? It's the same nonsense. You draw the trend line, we'll be right next to it. We're at the 50. This is basically a sit and wait, see what's going to happen type thing. I think we're in a sit and wait situation on Monday.
Yeah, everything we're looking at is a make or break. Is I think what we're
basically it's on the same spot. Which is why my first chart had that make or break on it. That's sort of the theme I see on the street right now. So look at this, but then it gets tighter. Watch this. You pull this in nice and tight by going from here to here. Structure of this chart is dynamite. Right now, here's what I'd have to say. They key off the 50, you key off the 50. They keep keying off of it. Why shouldn't you? You get a 1 bar through it, get brave and see what happens. You had the 1 bar right here, I guess, the little green bar, and already an up day. So I would say you've got support at the 50. You've got support just under the 50. You've got even more support below that. I don't see why you wouldn't want to buy the dips in this. Great looking stock, then. TWLO, huh?
All right, here's a new one. When you're ready. BTC equals Bitcoin.
BTCE.O?
No, BTC equal sign.
BTC equal. I never knew that was that's how you get Bitcoin versus US dollar, huh? That I wouldn't have known. Mm-hmm. So obviously I've already played with this chart. I've been there. Let's throw something new on it. You know what? You want to look at Bitcoin? I can make this easier for you. I always look at Bitcoin. I have to have a chart here somewhere. There we go. So Bitcoin. When you look at this chart, it's nothing like the other stuff that we see. It's not sitting at a do or die level. It's not at the bottom of a trend channel. It's not through averages. Seems to just be in a world of its own compared to the other indices. So it doesn't seem to be opposite dollar or together with dollar. It doesn't seem to be opposite gold or together with gold. It doesn't seem to be opposite stocks or together with stocks. It seems to be a market in a world of its own. I really like that, by the way. So what I would expect is if you get a decent sized pullback, you get a decent sized pullback to bring you through the average to the bottom of the channel. And why I would say that is because it's characteristic of what this does. If you're going to get a deep enough pullback, you'll get through the average, you'll hit the channel, and back up you go, or you'll hit a support line. Now, you've got a steeper support line right here. You may be bouncing off of that. I did make a call recently for 41,300. That call remains valid. I have not changed my call yet to the upside. So I'm still looking for 41,300. That would put us somewhere about here. Somewhere about here is where I'm expecting us to get down to. I don't know if we'll get as low as this, but somewhere in here is my projection. And then we'll reassess once we get down there. So I say you buy the dips in Bitcoin because its characteristic is after a decent pullback. It's been doing this for years, by the way. After a decent pullback like this one, the next move's up. All right, so we're in a little bit of a pullback now. We'll take it. Next move should be up. Steeper, maybe it'll happen quicker. And I say, so what? Let it be. But I'm willing to buy dips in Bitcoin until something changes in its characteristics. And we can remove that. I say buy dips. As far back as this chart goes, buying dips has been the absolute right thing to do. So until that complexion changes, we buy the dips, expecting a drop into the 41, 42,000 area.
All right. Peter
says, bear flag
I...
building there too, Cats. So don't be very happy with Bitcoin until it has its pullback. This could easily be a bear flag building. If this is a pull, just to give you the view of why, it's not why I'm looking for the downside, but now this is starting to develop as well. But this could be some kind of a flag thing going on here. Right? Make a parallel of that, drop it down here. It could be a little bit flaggish, some weird stuff going on there. So let's see if it completes its move inside this channel, comes somewhere down here to my projected area, and we'll see where it goes. So if you needed a day trade, sell rallies of Bitcoin. If you want a longer term trade, buy the big dips when they come.
All right. Peter says, I'm from Australia. Could you look at the ASX 200, please? So I looked up the symbol for that. I think the best one to look at would be .AXJO.
AXJO. Ah, Australian index.
That was the best one I could find anyway for the Australian index.
Yeah. All right, so unlike the U.S. markets, you could not get above previous highs, huh? Look at that. U.S. markets took all that stuff out in the background before Corona. But the Australian market did not. In fact, didn't even get close. Now, let's connect some trend lines here and see if we have anything interesting. Only interesting trend lines I see are the top ones, not the bottom ones. This is interesting. Very nice line, in fact. Let's see if it means anything. See if that's a parallel or not. Oh boy. All right, so now let's pull in a little tighter on this. All right, let's throw a little extension on there. Let's pull up a little tighter on that. Where are we at?
A make or break level?
Another do or die level. I'm telling you, it's getting boring, kid. Unbelievable. So this has to mean something. You realize that, right? Seeing all these charts one after the next in the same precarious position, it's got to mean something. And this was the ASX. Let's just step back again and look at that. Oh boy, that's a big F flag. And you know what happens at the end of an F flag's life, right? Dano, what happens at the end of an F flag's life? The market generally gets F. That's why it's called the F flag. So yeah, I don't like that at all. That's scaring me. The way it moves around doesn't have a lot of volume either. You can tell by the bars that there's not a lot of volume in these bars. It's just too weird looking. The settlements are all opposite each other every day. Weird looking chart, but I don't like that at all.
Yeah, there might be a better one for ASX. I just found one I could find. So Goldfinger wants to know if you would tell him what the true level of support is on CLF. And I believe that's going to, let me see if I can grab the absolute symbol.
Maybe it's a .0.
I'm looking. I just show, well, if it's Cleveland Cliffs, it's just CLF and that's it.
I don't think that's what we have. See what it says up here? Gave me CLF 4G. Let's do it with the power console. That's probably it. Whoa! I hope you're not long that stock.
He wants to know where the true support is.
Where is the true support on this chart?
3. Just kidding.
You know what? Longer term, you're not so far off. It's here. It's not going to be very high. If you did longer term, look at it like how far down can we go to hit a major trend line? It's going to be low. So that trend line I just drew, let's say this thing really fell apart and came all the way down there. You're looking at just under 8. I'm not calling for that yet because I've had no chance to analyze. But if you're looking for support, that means that you're someone who's long, wrong, and is wishing I can find support for you. Here's what I would tell you: get out. Forget about support unless you're looking to buy. You should be out of the trade already. So look at that. You've already broke the 50. You're not at a do or die level. You're just at a trend line. But let's look at it this way. You made a higher high, and then you made a higher low, and we rallied up and made another higher high. And when it came off, it barely came off at all. Right? Made a higher low. It barely came off at all after making that high. Maybe here we'd call it. And then it made a higher high, and it came down and made a low, which is higher than the previous low. So far doing good. What happens now? Everything goes wrong. A lower high. Everything changes right there. So you were in a nice pattern, a high, a low, a higher low than the previous, a higher high than the previous, a higher low than the previous. Pattern stops right here. And you've already made a lower low than the previous. I don't like this stock at all. Ugly. So if you had to find support, if you put a gun to your own head, you're breaking support right now, I don't think you find support till all the way down here at the shelf. Somewhere in here. 11, between 11 and 10, maybe you find some support. But yeah, that's pretty ugly. I don't like that the lower high, lower low thing going on there. It's completely different from the rally.
Okay. Michael would like you to look at Tesla, the actual TSLA.
TSLA. Okay.
And I believe that's a .o.
That's a .o.
Mm-hmm. Yep, there we go.
No boy. I think this one is caught up in the bond fate, to be honest. I mentioned this in a video a few nights back. I think the problem that this one has is that it's got a lot of debt. And rates are starting to go up. So fundamentally, it made me decide to go look at Tesla a few days back, which I did. And I put it in a video and said, I think Tesla is getting testy. And that was right here. The video went out on this evening, and I said, I'm starting to not like Tesla, which I'm a big fan of Tesla. In fact, the video, if you look at it, I think I titled it, Tesla is getting testy up here. From there, we broke the 50-bar moving average. You dropped 3 days in a row, a one-day rally. Next day, she breaks down again. Not so good right now, kids. I think Tesla's got a little pullback coming. And to qualify support, simple support, and it's not really that far from here. In fact, this line is wrong. Support gets even better. It should be more like this. The support's not all that far from here. I mean, it is Tesla. You can end up in the, what price am I looking at there? The 548, 550 area, just to hit major support. But more importantly, here's what I would tell anyone that's long Tesla. If you take this out, this area right here, you got yourself a problem. Just as I showed you on the other chart, higher highs and higher lows works really well. When you start making lower highs and lower lows, that doesn't work so well anymore. So I think you've got a little bit of an issue with this area right here. If you can't hold this, you have not held the line, you will find even more selling coming in. So hopefully you can hold in this area.
Oh boy, wants
the
to
look
know
of
your
that
thoughts.
chart's not very good right now.
Agree. Oh boy, would like to know if you have any thoughts on the $1.9 billion stimulus vote tonight.
So yes, I think that we're okay printing that. All right, so it's already in the pipeline. It's in the markets mentality. I think from there they need to stop. First of all, you might, if you've looked into that bill, there's only some of it going towards COVID, this much. The rest is just going towards other stuff. That does make it back into the economy, however, no matter where you put it. So the money going in should give us a boost. The problem with it is we're now reaching a point where printing money is not as good for the market as it was just 6 months ago. So I say the stimulus gives us a little bit of a boost, but I'm going to give you now, no chart, my experience. This stimulus package will not make the market go higher. It'll come out, the market will go up a little, and we'll realize it doesn't do any good. It's the wrong time for it. It's the wrong amount of money. The best thing to do is slow down the money coming into the system and mop it up a little. So I think we'll get a little jolt out of it and continue lower for a little while. We'll see. That's just my opinion. The chart will tell me what to tell you day by day.
Okay. And let's see, Gary, I can't find the chart that you're looking for, the WTIC. If you know what the name of that is, I'll look again. Oscar, can we look at car.o?
Say it again.
CAR.o.
Car. Avis?
Mm-hmm.
Woohoo. Guess who's renting cars again? We are. People are going out. Look, I think you probably just ran some stops over the double top here. But looking at this chart, and if I knew nothing about it, I would say absolutely buy pullbacks in this chart. Glad to see Avis moving higher. I haven't looked at this chart in so many months. It's been so long I can't remember it. Maybe since Corona I haven't looked at this chart. Let me just try a different template in here.
I think that it set a new all-time high.
It just blew through its all-time high over here, and it made it through, and it's above it right now. I think it looks great. I would buy dips. I'm not afraid of it at all. I think that pullback will last for just a day or two, and you can just go right back in there and get long again. Right.
All right.
That bad boy.
Goldfinger says, thank you, Oscar.
My pleasure.
boss.
I hope everyone has a great weekend. I will tell you, if you are new to Metastock or new to Oscar, me, come join me. Just go to livewithoscar.com. Free trading room, no credit cards. You will register. It's simple. These are the only questions we ask. That's it. And then you will end up clicking Chat Live with Oscar, which is right here, and you will be in a chat room with me. Just click Chat Live with Oscar. Easy to find me. We can go over charts together. We can get through these rough and tumble markets together. And again, there's no fee, so you might as well come on down and see what we got here.
And that was livewithoscar.com?
That sure was. Oh, I'm sorry about that. I was looking for my S&P chart. All right, so this is where we're going to leave off, where we started. As you can see, the S&P is in that do or die theme spot, and so are many of the stocks that we looked at that make up the S&P. We are at a do or die spot right now.
All right.
Thank you, everybody, for tuning in. I hope this helped, and I appreciate you waiting around till after the close for these charts.
All right. Thank you, Oscar. Really appreciate having you there. Livewithoscar.com, everybody. And we'll see you again tomorrow at the Trader Summit.
I'll see you tomorrow. Thank you so much.
All right. Thank you, Oscar.
Bye-bye.